Morgan Stanley hikes Nvidia forecast, calls AI digestion laughable, sees explosive demand. Morgan Stanley raised its 2026 estimates on Nvidia, dismissing the notion that AI is in a digestion phase as laughable. Analyst Joseph Moore wrote, "In the last 4 weeks, as investor sentiment is worsening based on macro and supply chain risks, core demand for GPUs has shot higher amid a shortage of inference chips across most of the relevant large language models in all geographies." While Wall Street is wringing its hands over a laundry list of very real concerns, Silicon Valley focus has shifted to a very different challenge. Growth in tokens generated of, by some accounts, more than 5 times since the beginning of the year is very much straining the ecosystem and is driving a surge in investment to handle those workloads. Moore maintained his fiscal 2026 estimates due to H20 restrictions, but increased his fiscal 2027, calendar 2026 revenue forecast to $255.5 billion from $230.9 billion, and adjusted earnings to $6.01 per share from $5.37, citing strong data center growth. Delving deeper, Moore noted that AI inferencing demand is rising based on data from OpenRouter and a wide variety of proprietary checks. Despite tariffs, trade tensions, and other concerns impacting sentiment, Moore said these issues are not showing up in the hard data. Recent commentary, including tweets from OpenAI CEO Sam Altman, Alphabet CEO Sundar Pichai, Elon Musk's Grok, and others indicated a sharp demand acceleration for AI. Moore added, "The commentary around demand has intensified in the last few days as inference demand continues to get stronger. With Blackwell supply still limited and Hopper demand improving, it is indicative of further proof that models are being used to drive revenue," Moore said. "This is not driven by the limitless aspirations for training megaclusters fueled by highly speculative venture capitalists. This is proof that the models are being used and driving revenue, which mitigates the biggest overhang on Nvidia stock, that this is all driven by venture funding that will dry up," he explained. He concluded, "The strength we highlight here is driven by usage, by the revenue-generating part of the business, and provides proof points that the scaling of inference as we move to reasoning-oriented models is a real thing. We are seeing this spanning geographies as well, so published concerns about China having stockpiled H20s seem inaccurate."